welcome to the deliberations of the CNBC TV 18 Citizens Monetary Policy Committee. Ahead of the Reserve Bank's monetary policy on Wednesday, we take stock of the situation. A growth-hungry government last quarter took the extreme step of demonetization to get idle cash into banks, which in turn brought down bank lending rates. Surprisingly, the Reserve Bank did not cut rates in the December policy, even though it was clear that consumer inflation will drop below 4%, remain there for a goodish bit. Food inflation will drop below 3%. On the contrary, the monetary policy minutes actually sounded hawkish and worried about core inflation remaining sticky. It also pointed to the need to concentrate on the 4% consumer inflation goal in the years to come. The Reserve Bank also said that the growth downturn due to demonetization will be transitory and GDP could fall perhaps only by a few basis points. However, since the last policy, growth seems a little more hurt. Inflation looks set to be 3 points something for longer than just a couple of months. And of course, the government has delivered somewhat on controlling the fiscal deficit. So what should the Reserve Bank do at the February 8th meeting? Let me welcome the August members of the CNBC TV 18 Citizens Monetary Policy Committee. Chairman Pronab Sen joins us from Delhi. Soumya Ghosh, Chief Economist, State Bank of India. Sajjid, Chinoy, Chief Economist, JP Morgan. Samiran Chakraborty, Chief Economist, Citi. And Sonal Verma, the Chief Economist from Nomura. She joins us from Singapore. Gentlemen and lady, thank you very much. Dr. Sen, we start with you as the chair. Also because you got it right last time. You were the only one who said the Reserve Bank will not and should not cut. They didn't. But for the moment, before I come to your assessment of the Reserve Bank's action, your take on growth, sir, do you think it now needs more support than it has already got in the form of lower rates?
No, I think there's more to come. The growth will be muted for a while, and I think it's something that the RBI should be a little concerned about, and the government has to put a brave face on it, but the RBI really needs to take an independent call on it.
Assessment of growth, sir.
Assessment of growth, I would still say that for the year we are still looking at 6 to 6.5. The 6.5 to 6.75 of the Chief Economic Advisor, I think, is a little bit of dissimulation.
Okay. All right. Let me get the other economists on this. Sonal, your assessment of growth, but more importantly of inflation. We have seen it tick below 3%, below 4%, that is 3 point something for 3 months now. Do you see this continuing and therefore more space for the Reserve Bank?
Well, I think both the growth and the inflation outlook, the view for the next 3-4 months will be very different from the view for, I would say second half of 2017. Right now, I think the impact of demonetization on growth is still playing out. We've seen certain sectors like, in services, rural economy being more hit than others. And our assessment is that growth in the second half of FY17 will be closer to 6%. The impact of that on inflation, therefore, in terms of, perishable food prices staying lower for some more time also does exist, which means that, the Reserve Bank, which in December was also still talking about 5% with an upside risk, that obviously is not going to play out. Inflation is tracking closer to 4.5%. So I think both the growth assessment of RBI, which is 7.1, and the inflation assessment of the RBI, which is 5% with upside risk, clearly things are not looking that rosy. Now, the view post, the next 3-4 months, in our view, will be very different, because if the economy is remonetized, well distributions happened, lending rates have come down, then activity levels should start to stabilize. Our view is sometime around March, and should see a decent rebound from, I would say, post April, May onwards. And if that is the case, then there's no reason why perishable inflation will stay low. So, we will also see some mean reversion in growth and inflation going forward. But I think for now, things are not looking as rosy as the Reserve Bank had expected, and the budget has been very prudent, so there is space.
First, Samiran, what do you expect the Reserve Bank will say on growth. They passed up the question or said it was, minorly affected. Now we have our two economists and all of you assessing it to be, a deeper cut in growth. What do you expect Reserve Bank will see on growth and on inflation?
I think we have now got some organized sector data on how much impact has been. To be fair, the way the market feared there will be a big decline in things, the organized sector data at least is showing that the decline is not large enough. But unorganized informal sector impact, it will still be somewhat of a guesswork from Reserve Bank's perspective. So I suspect that they might not immediately revise down their GDP growth estimate. They might wait for the CSO to come out with their own estimate before RBI actually altering their own. Because
they will stick with 7.1.
My sense is that it will be difficult for them to give out a number so early, which is different from the CSO's number. So I'll be slightly surprised if they actually quote a number which is different from the earlier number.
In inflation?
Inflation, look, my sense is...
5 looks ridiculous now.
My sense is that sitting in February talking about 1 month ahead March 2017 inflation is not what a central bank should be doing. A central bank should be putting out at least a 9 to 12 month ahead inflation forecast. So from that perspective, I am hoping that they will put a March 2018 forecast in play. And in my view, that number should be around 4.5.
Soumya, your expectation of what the Reserve Bank might say on FY18?
See, there are two things playing out over here. The first is obviously the growth numbers and the second the inflation numbers. If you ask me, if I talk about the inflation numbers first, if you look into the RBI fan chart in the past also in 2014-15, every time the forecast and the fan chart has been significantly on the upside. For example, in 2014 November, we had the RBI fan chart showing 8% inflation, then it crashed to 5%. A part of that because was the oil effect, but there has been an overshooting of the fan chart. So in my sense, I mean, as I agree with Samiran that they will give out a fan chart, but I will be very eager to see how the fan chart is moving. And in my sense, inflation is going to significantly be lower than the expectations of which we have, the RBI could be as of now, and possibly it could hit the 5% or even below 5% for a large part of the next fiscal year. Because note that we are actually going over a very low base, and this year by March the undershooting could be as much as 60 to 70 basis points. So that's a big number. The second point I would like to see is on the growth numbers. Growth, I think, as of now, if I look into the CSO numbers, if I look into the different commentaries, if I look into the results which have been coming out, if I look into the organized sector data, I think the impact is not that significant. But I would still be hesitant to stick out my neck and say that the impact of the demonetization on the growth should not be playing out. In my sense, we should be very minorly looking at the next quarter. I think some of the results which have been good this quarter may be hit in the January to March quarter. So in my sense, we should be looking out those trends and then have a firm view on the GDP numbers. So in my sense, the RBI may just not be ready to say that there is a downside risk to the 7.1%. They may still go with it. But in my sense, the growth numbers this year, as of now, looks a little bit on the upside in terms of the estimate.
Sajjid, let me get you on that. Look at the MPC minutes, release of the minutes, and I'm only reading Urjit Patel's comments since I guess that would be a decisive factor. His last sentence is, achieving the inflation target of 5% for Q4 of 2016-17 and securing 4%, the central point of the notified target range, remains the primary objective. So I want you to outguess what the Reserve Bank might say about FY18 inflation and about this, their own goal itself.
So I think a few implications flow from that. I think that is the operative sentence in the last minutes. Growth matters much less. What matters is, it only matters to the extent that it influences the RBI's inflation forecast. And growth for this year doesn't matter at all, Latha. This is water under the bridge. The RBI has to look 4-6 quarters ahead. What matters very much is what is their growth forecast for next year. And does that mean more pricing power and therefore higher inflation? That's the key here. So number one, I think there are 2 factors or 3 factors that will drive their thinking. One is, how do you view inflation next year? Our own sense is you get an average of about 4.5%. But the key is, when do they want to get to that 4% inflation target? We know the 5% is undershot. If in their minds they want to get to 4% by March 2018, that leaves very little space. If you give yourself 2 years, there is some space, number one. Number two, what you didn't read out is they worry a lot about global factors.
Yes.
The fact is, since November, financial conditions around the world have tightened meaningfully. That has closed space for many central banks. India in the last 3 months has seen $10 billion of portfolio flows, the largest negative streak in almost 4 years. That's going to close some space. And thirdly, I would argue the pressure on them is a little bit less, because guess what? For years we've been talking about transmission. The transmission happened. Banks have already cut lending rates, yield curves have flattened. Some of this will remain no matter what the RBI does. But monetary stimulus is already underway. Market rates have come down. That takes some of the pressure off the RBI.
But the Reserve Bank has also been a little volatile in its outlook. The October outlook was fairly benign, and the December outlook was fairly hawkish on inflation. That leaves it, makes it a little difficult to outguess what they will say on February 8th. There are two more factors we have to discuss after the break. One will be the rupee's perhaps overvaluation, and secondly, the liquidity scenario. Both those discussions, and only then the MPC will vote. We are back in a minute.